George Tsilis joins us, our senior markets correspondent. Got some stocks on his mind. GT, we're coming off a little bit this morning, as you know. Now we're down about 30 bips. Bonds rallied, obviously, pretty strong overnight. Dollar down pretty sizably, too. But every time we rally bonds, we sell them right back off, just like Friday. So I don't know who's missing the message here, GT. Who's coming in trying to buy treasuries still?
Well, I mean, obviously, OJ, there's some volatility. Everyone's talking about volatility in the stock market, and that's to be expected because there's a lot of
bonds are even wilder.
on obviously obviously the outcome for the election is going to create that volatility. So I think, looking at bonds, like we've been talking about, the trend is higher for rates, especially the long end of the curve. It's confounded a lot of folks, especially since it occurred after the Fed actually lowered rates in September. So with that said, I think today we're just seeing some we're seeing some risk off in the equity space, and of course some defensive posturing going on in the bond market.
There you go. With the 25 bips cut supposedly locked in, and yields up like 60 bips or something since the last cut, you'd think that the trend's going to continue then if they're going to cut again, and that's what sent yields ripping higher. Especially because last week they tried to buy them a couple times, George, and good auction, nope, faded it. Weird employment print, nope, faded it.
Well, that's the thing. I think at the end of the day, you have to consider what long-term yields represent. That, like I said, it could be a function of two things: growth and inflation, or one or the other, or a combination of both. So again, not a bad thing. We just have to get used to higher longer-term rates. When you consider what brought rates down to where they were, particularly going back to the pandemic, especially mortgage rates, was massive quantitative easing. So unless that happens again, I suggest that this is a new normal, somewhere between 4 and 5% on the long-term rate. So it's a good sign, I suggest, for the economy, but it's not a good sign, especially if you're looking to refinance debt, which we know there's a lot of corporate debt that needs to be refinanced coming up next year. But also if you're looking to purchase or secure financing for long-term assets, autos, housing, et cetera.
Yeah, well said, George. All right, let's talk some stocks here. Thanks for that thought, GT. Dollar still at the lows of the morning. Nothing's really changed there too much. Tesla's down almost 4% right now, George. Looks like some of the indications from Chinese sales are a little soft. Stock's getting hit, and this is the first time. I mean, look, it's been kind of coming off basically since their earnings popped, but let's not forget there was follow through to earnings as well that took us up to 273. So down to 240 now. This is a pretty meaningful pullback in Tesla.
It is. I think this is maybe 6 or 7 days down in a row for Tesla. It did, as you mentioned, it gapped higher and there was a continuation. So there's a meaningful pullback. Obviously today there's the news associated with Chinese sales. If you look at Chinese EV sales, competitors of Tesla, XPEV, Li, NIO all demonstrated year-over-year comps, which were growing. Tesla demonstrated a decline of about 5.3%. year over year, also sequentially down 20% month over month. So I think there's competition, which is eroding, market share growth for Tesla. They're still growing, albeit again, year over year comps were down, but nonetheless, the stock is pulling back after a pretty meaningful push to the upside. I think there's also a political element to Tesla. Elon Musk is obviously a fan of Trump, so maybe that is correspondent of what we saw earlier last week or after they reported earnings. There was significant margin improvement. They're surely gaining scalability. They're nearly 2 million per annum units, which is pretty remarkable. But again, it may be politically involved as well in terms of the pullback. We're seeing some of the Trump stocks pull back. And that might be just, positioning more conservative as we move closer to the event of the election.
Okay. All right. I like that. It's an interesting thought, the connection there possibly too. All right. Well, at this point, I think it's frustrating for Tesla bulls that we've given back, $30 since that earnings rip. Certainly, last week it wasn't the only big tech company to slip, but notably down this morning on this news with stocks a little changed. George, in the AI trade, a lot of folks have been going to nuclear and going to energy as a way to express it. Let's talk Constellation for a second, which is down this morning. And this has obviously been a pretty big winner, but one maybe that's got a little ahead of itself possibly and kind of assuming the prices they're going to get for all these energy commitments, et cetera.
Well, yeah, I mean, you have to think about, all utilities, they're publicly regulated by, regulatory commission. So they're
Mhm.
not able to just jack up prices based on enormous demand,
Right.
right away. It
But
takes
then
time.
Microsoft
So
has got the
that's where
supposedly 3 Mile Island locked in.
well, if they've locked in, forward rates for the utility contracts that they have, I mean, they can certainly do that. But you also have to consider that, companies like Microsoft and the other hyperscalers can't crowd out the public. So that's something to keep in mind. I suggest, these a lot of these stocks are ballooned higher significantly. VST is another one, Vistra. Anyhow, but if you look, there's a pullback today. They actually came in as a company beating the estimates for both sales and earnings. Earnings were higher by 19% year over year. CEG, which was spun off from Exelon, is the largest nuclear group of utilities. So that's something to keep in mind. Obviously, nuclear is becoming a thing again in terms of popularity based upon the on-demand baseload power they can produce. You can't build new nuclear reactors very easily. There's a tremendous amount of regulatory and local political concerns and environmental concerns. So there's really a cap on how much increase there can be for utilities. But nonetheless, apparently Microsoft has got a 20-year deal with CEG to pay up a premium for electricity. And so with that said, you have to consider, some of the elements behind utilities because of high demand for electricity, because of data centers and the hyperscalers. So this is a trend, obviously. But again, utilities typically don't move, 50 to 100% per annum, except again in the last year, based upon the expectations of higher demand and prices for all electricity.
Yeah. It's a lot of unknowns still, I feel like. What we do know is that they're going to plug about $1.6 billion into restarting 3 Mile Island. But the actual energy is not going to change hands to Microsoft. They're not going to restart it until 2028. So it just seems like a very high beta play unless there's going to be a lot more contracts. I could see that this stock moves up every time, it gets a new contract or something. But, there's only a handful of hyperscalers, really. That's kind of why we've had the market so concentrated, is because of the nature of kind of limited major powers that are doing this.
Well,
so, how many contracts can they seal like this?
Yeah, so I'm not a utility lawyer or regulatory attorney, OJ, but if you notice that, CEG is an independent power producer, so I don't know what differentiates that from a traditional utility. So therefore, there may be, fixed forward contracts that can be set at tremendously higher rates.
Maybe, sure, yeah.
VST.
We don't know, by the way.
So that's something to keep in mind. I'm not an expert in it. It's just something to consider if you're looking at investing in these names.
Yeah, from what I know, I haven't seen details on what exactly Microsoft is and what they've agreed is the price. There's been some rumors, but I feel like that still is a pretty big deal. So, all right, shares down 11%. Yeah. It's going to be a choppy chart, I feel like, just because a lot of this stuff is still so many years out in the future. George, right now, though, one of the big momentum trades still has been in the pharma industry for obesity treatment. Hit me real quick on the thoughts from Vertex and the latest there in their own obesity treatment.
Yeah, so is it Viking Therapeutics?
Viking,
they've actually got, so they've got a pipeline of drugs, which includes drugs for liver disease, fatty liver disease. So an adjunct to that, they're utilizing their research to formulate GLP-1 drugs. So this stock has made a tremendous move over the last year. If you look at Eli Lilly, Novo Nordisk, they've actually rolled over a bit. So that to me suggests competition and pricing power. Competition is increasing and pricing power is eroding. And that may be a good thing in terms of more distribution across the board for affordability for consumers. And again, but one of the things about Viking is they're in phase 3 trials for one of their primary drugs, but they haven't generated revenue. So that's something to keep in mind if you're looking at this name as well.
Okay, good stuff. Thanks, George. Up pretty nice here this morning, 4.5%, especially after Eli Lilly slipped last week. Maybe a little room for a competitor to kind of weave its way in. Thanks, George. Good stuff on the stocks and the bond thoughts.